July 10th, 2024. If you've been watching my videos, you know that I've been thinking that we're probably going to get a pullback for quite a little while now on the daily chart. Even over here, I didn't think that this was going to happen. It seemed pretty unlikely, but you know, when the market it just goes to show, when you have a small pullback bull trend, the trend can go on a lot longer than traders think it can. And I still think this is really climactic, and I still think we're probably coming back into this range, but again, I keep saying that and I keep being wrong. So you have to, at a certain point, adjust your expectations. Again, it could be a bull channel of some kind, and we could be towards the top of it. Again, I think this looks really climactic. I mean, we're, I don't know, 175 points above the moving average. Seems, pretty unusual for that to happen. But another unlikely bull trend day today ended up happening. Bar one, a doji bar. So possibly a wedge with yesterday. You can see we had 1, 2, 3. So 1, 2, 3, and a failed breakout of yesterday's high. So still, I think 20% chance that bar one is the high of the day. Any given day, bar one has a 20% chance of being the high or the low of the day. And I think, even with the failed breakout of yesterday's high, I don't think it made it any more likely that bar one was the high of the day because it was a doji bar. Had it been a bear bar closing near its low and potentially gotten a little bit bigger, I think that would have increased the chances that bar one was the high of the day, maybe all the way up to 25 or 30%. But with it being a doji bar, I don't really think it was all that good. Disappointing follow through on bar two. We have the big tail. So really not what traders are looking for here. Bulls, they see the gap up as a new bull trend, and we have a failed breakout of yesterday's high. They're hoping that we try to get another breakout above yesterday's high and start some sort of bull trend. So bar two is a high one for the bulls, but it's a bear bar. So really not as ideal as it could be here. I think we're probably going to start to go sideways relatively soon. There should be sellers somewhere above bar two. In general, on the open of the day, your goal should be to try and pick the high or the low of the day in your trades. The opening swing usually ends up being the high or low of the day, so usually that's going to be your goal. Today was one of those days where we got a failed breakout below the 18 bar range, and then we got a breakout back above it. I'll pull up that folder. You can see I have a lot of examples of this because it's relatively common. You can see we got a failed breakout above. We got bar 18, a failed breakout below. Here we got a failed breakout above, and then another breakout. Bar 18, failed breakout above, and then a breakout in the other direction. When you get a reversal on bar 18 and it reverses sharply, you can see a lot of times you end up getting a breakout into the other direction. It's a pretty common pattern. So it's just, it's a common pattern. So it's one of the reasons why I have so many examples of it. So anyways, I think I was on bar three. Tail on bar three, a doji bar. Probably, like I said, sellers not too far above bar three, or above bar two during bar three. I would imagine if we start to go much lower, there's going to be buyers because this is not all that good for the bears. Bar four, another bull bar closing near its high. It's good for the bulls, but the problem is that bar three is probably not the start of a bull trend. Usually when you get a bull trend, you get a pretty good signal bar. Today was not one of those days because the bull trend, you could argue, started with the reversal bar up on 19, and that's not a very good signal bar. So this is one of those days where we ended up getting a reversal and the signal bar was not all that strong. Bar four is a good looking bull bar, but you can see we ended up not closing above the bar one high. When traders get a breakout, they want to see it close above the bar one high, and we didn't end up getting it here. Over here, I'm not sure. We closed at the bar 9 high, so a little bit more bullish. But again, 4 not closing above the bar 1 high increases the odds that this is a trading range instead of a big bull trend. Bar 5, a doji bar, an inside bar. There's an open gap with the 3 high and the 5 low. Today there wasn't obvious open gaps early in the day. We didn't end up getting clear open gaps until over here. We had smaller gaps here, this low and the 22 high and the 24 low and the 23 high and the 25 low. So we had gaps open over here, but I was looking for bigger gaps with breakout points. So we didn't really get one of those until over here, this area. And there was not even an open body gap in here. So I was surprised when we ended up getting this big bull trend. However, when we only get one close below the moving average and bulls are consistently buying the moving average, the odds are increased of that happening. Bar 6, a doji bar. So although it is follow through for the bulls who bought the high one, it's probably not ideal follow through. Even if we do rally, we might end up coming back to the bar 6 high, since it's probably going to be reasonable to sell above bar 6 and scale in. I also think we're probably going to come back to the bar 3 high, because this doesn't look all that much like a bull trend from the open. It looks a little bit more like a trading range. Bar 7, a big bull bar closing near its high. It's good for the bulls. We're probably going at least a little bit higher, but I'm not sure how much higher. It's probably reasonable to buy up here and take a chance that we get a really big rally, but you have to be pretty quick to get out. You don't want to get stopped out down here or down here. It doesn't really make sense to buy up here and just let yourself get stopped out. If anything, over here, you think that this is probably a leg in a trading range. So if you bought up here, you're buying more down here, and you're going to use the rally that you're expecting to exit your trade around break even on your first entry with a profit on your second entry. Bar 8, a doji follow through bar. So, if you notice on 4, we had a bull bar and then consecutive dojis. Now we have a bull bar on 7 and then consecutive doji bars 8 and 9. So bulls were hoping 10 was going to be a pretty climactic bar and potentially 1, pullback 2, pullback 3, a third push up, and, maybe be climactic, but they'd probably be able to make, at least a scalp. And instead, we got the reversal down on 10. So 7, a bull bar closing near its high. It's possibly a wedge, 2, 4, 7, but it's not really all that worth selling. We haven't had much for bear bars today. 8, follow through bar, but again, a doji, disappointing. 9, another follow through bar, but another doji, so it's relatively disappointing. Bulls are hoping for another bounce really quickly here, but it's not all that likely to happen. If you're buying up here, I suppose you could take a chance. It's a bull trend day. And we've seen the low of the day, and that we have this open gap, and that this gap's going to stay open, and we're just going to rally all day. It's just not all that likely it's going to happen. And bulls still out of their longs on bar 10. So when you see bar 10, what should you be thinking? You should probably be thinking it's a trading range day, and we're probably going to close the gap with the bar 3 low, because we're probably going to close, the bar 3 high and the bar 5 low. Because it's an open gap, you would imagine that it's a trade, because it's a trading range, you would imagine that the open gaps are probably going to close. And if you're going to get down to here, odds, favor a breakout to the downside. So we're probably at least going below the bar 2 low if we get to the bar 3 high. We are probably going to get to the bar 3 high. So it's probably reasonable to sell below bar 10 or sell to close the bar 10 and just take a chance that we've seen the high of the day. Again, when it's early in the day, I think the goal of an individual trader should be to try and pick the high or the low of the day. You're probably going to be wrong a couple of times, but when you're right, you're usually going to make a pretty good amount of money. So I think early in the day, the goal should always be to try and pick the early high or low of the day. Bar 11, it's, follow through for the bears, but it's really not all that good. There's a big tail on the bottom. So we have big tails 9, big tail 10, big tail 11. You can see there's clear buying pressure here. This is a trading range. So while it's okay to just take a chance, some bulls probably buying the 50% pullback, taking a chance that we get the breakout to the upside. You have to keep in mind, I know that yesterday we had a small opening range and it stayed pretty small, but the vast majority of the time, if the opening range is 9.75 points, the range is going to double or triple. So there's not a whole bunch of rush to do anything right now. Odds are the range is going to at least double, if not triple. Even over here, when the range is 12, the range is probably going to double or triple. It's reasonable to take these buys just thinking, if it's going to do that, it's probably going to do it to the upside because of how, this bull spike. So these buys are just taking a chance that we get the upside breakout and a measured move up. I think it's okay to be, measured move up somewhere up here. I think it's okay. Spike and channel bull trend day, by the way. So spike, pullback channel. I actually want to add that to my spikes and channels. Bull trend. Do I not have it in here? Where is it? Spike and channel. Sure. Add it into here. But anyways, like I was saying, spike and channel bull trend, but you generally want to avoid buying in the middles of trading ranges. But when the daily range is so small, bars like 22 make a bit more sense to take and just bet that we double to the upside. It's possible that you're wrong and you get stopped out, but the logic is there to just think that the daily range is going to double. You can even set a stop order to just buy the high of the day and go for, a 1-to-1, and you probably have a 60% chance of making money. So it's a pretty reasonable thing to do. 12, a doji bar. Again, bad follow through. The bears are hoping it's a low one, but it's a bull bar, so it's probably not a very good low one. You also have to recognize that the bar 9 low, it was reasonable to buy below bar 9. We had so many straight bull bars from, we're in a 8 bar micro channel from 2 to bar 9. So the bulls who buy below bar 9 are thinking that they're going to be able to buy, scale in lower, and they're going to get back to the bar 9 low and make money. So additionally, that if we rally back up to the bar 9 low, there's probably going to be bulls selling out of their longs. So, one of the limit order trades that, I've heard Al talk about this kind of trade before. This seemed like the proper context to take it. But if we rally on 12 or 13 back up to the bar 9 low early in the bar, you might sell with a limit order at the 9 low, betting the bulls who sold below 9 are going to be disappointed in how 10 and 11 looked, and they're going to sell over their longs up here. But again, that's a limit order trade, and there's a lot of complexities that come with managing limit order trades. So not a recommended trade, not something I do, but just something to notice in general is expect sellers if we get back to the bar 9 high. The same way you can expect buyers if we get back to the bar 3 low or bar 3 high, because you're closing this gap right here with the 3 high and the 5 low. So we do get back to the bar 3 high during 13, and we did get a bounce on 14. So 13 gets back to the bar 3 high. It triggers below the bar 12, low 1. It's not a very good low 1 short. That it's a doji bar, so we're probably not going that much lower and probably not going that much higher if we rally, and not that much lower if we go down. So again, very small opening range. You're expecting it to double or triple. So there's not a lot of rush to get into the market. It makes a lot more sense to just wait for something you think is a good looking setup and then take that. 14, a reversal up. It's a higher low double bottom with 2. Bulls want to break out above and a breakout above the neckline and a measure move up. But it's a pretty tight channel down, so it's really not worth buying above 14. If you're going to do it, I would have a wider stop and probably buy more at the new low of the day. This is really, you're buying in the middle of the range, and it's really not worth it at this moment in time because of how tight the channel down is. So I'd rather wait and see what happens. 15, a bear bar. It's disappointing follow through for the bulls. It could be some sort of third push down. So 1, pull back, 2, pull back, maybe 3. But we're still in the middle of the trading range, and no one has any clear momentum. It seems like we're just pretty much going sideways. So it's not really worth buying or selling anything in here. Bar 16 is an inside bar. Do you buy above 16? I don't know. I think if it closed stronger, maybe. Again, taking a chance that we break out to the upside and should at least get to the bar 9 low. I'm not really sure it's worth it, considering, we're probably going to end up being a lot more sideways here. I'd just rather wait and see what kind of breakout we get. 17, a bear bar, was not able to close below the moving average, which is important. Bears wanted to break out below the wedge. So we have a wedge, bar 8, bar 11, bar 14, and we're trying to get a breakout below it on bar 17. 17 is also trying to be the first close below the moving average so far today. So if 17 is able to close below the bar 14 low and below the moving average, which it just basically has to close below the moving average, because if it closes below the moving average, by default, it's going to close below the bar 14 low. But if we get a breakout below the wedge and a strong close on 17, it might make sense to sell 17. The problem is that you're selling pretty low in what's probably going to be a trading range day. So you might get disappointing follow through. 18, doji bar. It's not the follow through the bears wanted. And 17 wasn't really the bar that the bears wanted either. Bears were hoping that 17 was going to close down here, and they didn't get it. So any of the bears who did sell were hoping we get a collapse on bar 18. Instead, we just get a doji bar. So that's really not worth doing anything as well. 19, a reversal up. It's another doji. So we have consecutive dojis, 18, 19. And I don't know if you were watching, but if you were watching during 19, it was a bear bar closing near its low for a good chunk of the bar. And then basically in the span of maybe 2 seconds, it went from its low to being a doji bar. So it bounced, like basically 2 or 3 points in maybe 2 seconds. It was really, really, really fast. I think to me that shows that the bears gave up on the idea of a bear trend. They're hoping for a strong breakout below, but when you're getting this much overlap, 17 isn't what you want, and then you get a doji bar as your follow through. Even if 19 is a bear bar closing near its low, I still think a lot of traders are going to be skeptical of the bear trend. So that's probably one of the reasons why that happened, and bears just ended up giving up. 19, bulls want, a lower low double bottom and a big reversal up, which they ended up getting. However, it's another doji bar, so it's not really worth buying. I already showed examples of a failed breakout of the 18 bar range. and a reversal up. So if today ends up being, if we start to get a reversal up, today could be one of those days where we get the failed breakout below and then we get the breakout above. Again, really small range so far, so possible that we are going to do that. 20, a bull bar closing relatively near its high. I think this is one of those interesting things where it's not really a great bar, but the context is okay. You might be buying the middle. I think you're probably buying pretty close to the middle. So you're buying the exact middle of the trading range if you're buying above 20, which is something I generally try to avoid doing. However, we haven't had the opening swing yet today. Usually there's a swing trade where during the opening range where either bulls or bears are able to make, they say, or Al says, about 40% of the daily, whatever an average daily range is. Recently, 40% of an average daily range has been about 20 points, but we've had a couple of smaller days lately. So maybe, you could adjust to saying 90% chance that there's some swing trade where traders might be able to make 15 points. In general, scalps are about 20% of the size, 10 to 20% of the size of an average day's range. And swing trades are about 40% of the size of an average day's range. And if you don't have a good grasp by looking at the chart of what an average day's range is, you can just track the daily ranges. I used to do that for probably like the first 3.5 to 4 years I traded. I just, had a little log of the past 20 days. So basically the past month worth of trading days. And I just had a little log basically that tracked all of their the sizes of the days, and then it was a little equation. It's pretty easy to write that equation. You can just Google how to use Google Sheets, and you'll figure it out pretty quickly. That divided all of those days by each other, and then you or added and divided. You get what I'm saying. You understand basic division, and then that spat out a number, and I would round to basically the nearest 5 and call that an average day's range, and determine basically roughly what a scalp and what a swing should be. After, a couple of years, you start to get the feel for what it just should be in general, but that's a pretty reasonable thing to do. Bar 20, a bull bar closing relatively near its high. You can probably just buy it and hope that we've seen the low of the day. I think it's kind of, probably not ideal, kind of the way that, selling the close of 10 and just hoping we've seen the high of the day isn't really ideal, but you can probably do it. I think that it's the same thing with bar 20. You can just buy, you could just buy the close, put a stop below 19, and hope we break out to the upside of the 18 bar range and get the measured move. So if you're taking that, you're probably only risking, 5 or 6 points, and you're trying to get to up here. So you're risking 5 or 6 points, and you're trying to make, 15 points. So you have 3 to 1, at least 3 to 1 risk reward. And so you should, and a reasonable probability, right? Because if we break out to the upside here, I would say 60% chance that you're going to get your measured move up. So reasonable probability as well. A reversal down on 21. Note that bar 19 was the only close below the moving average today. It's pretty unusual for the market to do this. Sometimes you do get a buy the close finish. I saw the stat the other day. I can't remember. Maybe it's like 40% of the time you get a buy the close finish. But a lot of times you end up getting profit taking towards the end of the day because bulls have been buying all day. And now they're done. So it's pretty unusual to get a spike, channel, and then another spike towards the end of the day. But occasionally you will get bull trends from the open that last all day. It's not, all that likely that you're going to get that, but today was one of those days where we did. 21, a reversal down. Bears, they want a failed breakout, and they're hoping double top bear flag, 17, 21, and they want to break out below the neckline, 19, and a measure move down. I think if you bought above 20, you probably just sit in the trade and obey your stop below 19. And then you get a bull bar closing near its high on 22. We should at least get back to the bar 12 high, which is the high of the channel, right? So spike 10, 11, and then channel down 12 through. And we're probably getting back to the bar 9 low, since again, the bulls who bought below there, maybe they added down here. They're expecting us to get back to this low and close the gap in here. So bulls, they buy above, they're willing to buy above bar 22. Again, same kind of reasoning. Daily range should double. It usually will. Consecutive bull bars 23. It's by the close, but a tail on the top is minorly disappointing. We're probably going at least a little bit higher. And then bar 24, a bull bar closing near its high. We now have a 3-bar bull spike, 22, 23, 24. We're probably breaking to the upside of the 18 bar range. You can see we went right above, or we blew right through the bar line low, which was a pretty important magnet. So it shows some strength for the bulls there. 25, it broke out to the upside of the day, but we ended up having a really big tail on the top because there ended up, obviously, traders are expecting a trading range, right? It's possibly an expanding triangle. It's not really worth selling the high of the day, but some algorithms will, betting that this breakout is going to fail and this is going to remain a trading range. 26, disappointment. Bears are hoping that this ends up being a bull trap and we reverse back down. However, we only have one close below the moving average today, and it was a doji bar. So really not as good as it could be. I'm not really sure, even if we trade below 26, if bulls will exit or how much lower we're going to go, since we were clearly always in long. I thought we were always in long, probably bar 4. You can make an argument we flipped briefly to always in short, but it was never all that clear that we were always in short. We were probably always in short, maybe. I don't know. You can make an argument that 10 made it probably always in short, or like 17 or something, but it was never super clear. It was always a bit murky, which often happens in trading ranges. But I thought we went clearly back to always in long on bar 22, which increased the chances that, again, we were going to get the upside breakout. And I don't think, 26 does much for the bear argument. 27, a bull bar closing near its high, but after 26, I'm expecting a bit more of a pullback before we go higher. Again, like I've said probably 20 times so far in this review, the daily range should double even from this high, even from the low of the day to the 25 high. It should still probably double. We're still only at 12.5. I'd be stunned if we don't get at least a 25-point range today. So we still should probably go higher since we are clearly always in long, and we're getting a lot of bull bars closing above the moving average. Odds favor us going a bit higher. However, after bar 26, you have to be expecting some sort of pullback in this area and then maybe look to buy a high 2 or something along those lines. 28, a bear bar closing near its low. It's an IOI pattern with bar 26, 27, and 28. Bears are hoping that this is, basically a final flag for the bulls and that we're going to get a reversal down below 28. But we're in a pretty tight micro channel up from bar 19. You can see 19 to 28, 9 bars. Our bull's going to exit below 28. They'll probably exit, but it doesn't mean that it's a great short if it triggers because of how few closes we're getting above the moving average so far today. 9, an inside bar, so IOII. It's still a breakout mode pattern, which is really what's important. We're probably going at least a little bit higher, but I'm not sure how much higher. Again, daily range should double, but we might have to pull back a little bit more first. It's still reasonable to buy above 29 and just put a stop below here, but it's not a high probability buy. You're betting on, again, the range doubling and you can make 15, 20 points to the upside, and you're probably only going to risk like 3 points. So it's not a very high probability buy above 29, but it's definitely a reasonable thing to do and a good trade for newer traders and experienced ones at that. It's a good trade. 30, follow through for the bulls. So we have consecutive bull bars, but this is a doji bar, so it's probably not as good as it could be for the bulls. And imagine, we might have to go a little bit higher, maybe the 27 close, maybe break out to a new high of the day. But a pullback, it does seem like we're going to try and pull back here. Again, we have open gaps, so we might just go. The context of the day, we were overbought on the daily chart, but the overall context of the daily range should double, and we only have one close below the moving average. I thought it made sense for us to go higher. 31, a bull bar closing near its high. So 29, 30, 31, 3 consecutive bull bars. I think we're probably going to go at least a little bit higher here. You can buy above here, and I think, pretty reasonable chance, even putting a stop below here, that you're going to end up making money. We probably, if this is going to be a bull trend day, if you bought here, your premise was that it's a bull trend day. And at this point, we have 3 straight bull bars. So if this is going to be a bull trend day, we shouldn't trade below this low. It seems it's pretty unlikely. This is also a minor ledge, the bar 25 low, 26 low, and 27 low. Ledges, in general, 80% chance you're going to trade below it and then trade back above it within like, I think it's like 100 bars is the stat I learned. Got it a while ago. I think it was more relevant when the stock market was smaller, when bars would more frequently have 3 consecutive lows. And I don't know I know that it's supposed to be 4 bars with the consecutive lows in order to be a ledge, but I have heard Al talk about ledges in a more minor way with 3. So I don't know how powerful this magnet is, but if it was 4 consecutive lows here, the magnet would probably be a lot more powerful. So you can buy above here, put a stop below here, expecting that if it's a bull trend day, we should not get back to this low. Disappointing follow through on 32. Do bulls exit below 32? You probably don't have to after 3 straight bull bars. It might be some sort of wedge, 1, 2, 3, but I don't know. We're probably going at least a little bit higher. An inside bar, a high 1 on bar 33. I'd imagine, again, it's probably by the close. This is all by the close, so Probably still buy the close 33, still a bull micro channel. I think we're going higher. We're in a pretty big bull micro channel. If you haven't noticed, we haven't traded below another bar since bar 19. So this is all a bull micro channel. And at this point, it's a 15 bar micro channel. So the first reversal down is going to fail. Even here, it's 13 bar micro channel. So you have the protection of the micro channel, and we haven't really been to the moving average in a while, that even if we trade below 32, this reversal should fail 14 bar micro channel. It ended up making it 18 bars. And again, it's one of the reasons why, you probably should exit. It makes sense to exit below 37 and just take your profit after such a climactic move. But at the same time, micro channel up, so you don't really have to. 34, a bit of a climactic bar, probably going at least a little bit higher, but this is definitely getting a big climactic. 34. 35 is a really big buy climax. A lot of times when you get climactic moves, the market will start to go sideways for most of the remainder of the day. Today was a bit of an exception where we got a spike and a channel and then another breakout towards the end of the day, but still reasonable. Still reasonable to be long, still buy the close, but again, a pretty climactic move. You're not going to buy the close of 35 and just expect, the next 4 bars to look like bar 35. You're buying up here at the top of the spike, thinking it's probably going to turn into a channel. 36, doji follow through. So we're probably going at least a little bit higher, considering, again, really large micro channel and four straight bull closes, but I'm not sure how much higher we're going without a pullback. Again, if we get a pullback, it's going to be minor and we're going to continue higher afterwards, but this is just really climactic and pretty far from the moving average. So usually when you get this far from the moving average, we start to go sideways. And this is kind of my same thing with the daily chart that I've been talking about. I don't think, I look at today's bar as kind of like bar 34, maybe 35. We're probably going higher, yeah, but this is just extremely climactic, and we probably need to get a couple legs sideways to down. We just seem to not want to do that. But anyways, outside down bar 37, a bear bar closing near its low. Are we going a lot lower than 37? I don't know, probably not. It's probably not worth the sell. We've had such a large micro channel that there's going to be buyers below here, very large portion of the time. Buyers below 36 in general, a very large portion of the time, within a couple of bars, maybe 3 to 4 bars. 38, a bull bar, but a big tail. It's a disappointment bar for the bears. Maybe if the bears sold below 37, hoping we get a collapse on 38. Pretty unlikely, but, very hopeful trade. Pretty unlikely, though. When you get disappointment 38, those traders will exit. That causes the rally. 39, bull bar closing near its high. 40, an inside bar, a bear bar. Bears hoping that this is, we started basically 1, pull back 2. But again, I think that, this is a bad low 1 short for the bears. It's a new breakout to a new high on 39. I still, you can think of it as a low 2, I guess, but this is not very good. We probably need at least a third push up. 39 on its own is strong enough for a second leg sideways to up. So it doesn't really make a lot of sense to be selling. 40, doji bar, disappointing for the bears who decided to take the sell below 41. And if you sold below 41 and you did not get an immediate collapse on 40, if you sold below 40 and you did not get an immediate collapse on 41, you're going to use 42, the tail, to exit around break even. It's exactly what traders are doing, and that's why we get a big bull bar on 42. Tails, so wedge channel 36, 39, 42. So possible wedge forming. Again, probably just means we're going to start to go sideways. And then you get a climactic breakout 43. It's the climactic breakout above climactic breakouts on 43. This has gone really, really, I think, too far. It is a wedge channel, and you're trying to get a breakout above the channel, but pretty low probability of success considering how overbought we already are. 44, a bear bar closing near its low. You can sell 44 for 2 legs sideways to down. The reason I marked the sell over here is because you can do the same thing here where you sell for a couple of legs sideways to down, but it's more of a scalp, right? You're not selling, hoping we get a collapse even back down to the bottom of the channel. You're selling, and if you should probably get an immediate pullback if you're taking the sell, and then you look for your second leg down. And once you get it, you don't be greedy, you just take what you get. Problem with this kind of trade is a lot of traders aren't willing to accept a really small profit, but all you're going to get a lot of the time is a really small profit. So you can sell below 44, but high 145, it's probably fine to just sit in the trade, or it is fine to just sit in the trade, maybe even sell more if we trade above 44, since we should get a second leg sideways down from 44. But that the bar 43 close is a magnet because it's such a strong bull bar closing near its high. Consecutive bull bars 42, 43 theoretically by the close. We're probably going to get at least a second leg sideways to up from that, and we should get back to the bar 43 close. Probably sellers above 45. You can see we found sellers above 45 during 46. A bear bar closing near its low. Am I selling below 46? Probably not. We're probably going at least a little bit lower, but again, two legs sideways down, this could be the second leg. And then 47, a bear bar closing near its low. But what do traders look at this as? Do they look at it as, this is the start of a big bear trend? Or are they probably going to see this and think, wow, this looks like a great place to take profits, two legs sideways to down, and I'm getting out pretty low here. So that's probably more of what 47 is. There's no reason to sell. We've been in such a strong bull trend for so long. Yeah, you're getting reasonably good bear bars, 37, 40, 44, and 47. But there's no reason to sell. We were getting much stronger bull bars. And the best case in the world scenario for you is basically that we get back to the bar 37 close, which is the bottom of the bull channel, and we start a trading range. So to me, this seems like it's probably going to start to go more sideways. 48, a high 2, so high 145, high 2, 48. Any bear who's still short, it's a mistake not to get out, I think, on the close of 47. But any bear who's still short is going to exit above 48, high 2. We're probably going at least a little bit higher. I would imagine the bar 43 close is the magnet. Do you buy above 48 and put a stop below 48? I probably wouldn't. I think you buy above 48, you buy more below 48, and you put a stop below 38. The bottom of the bull channel. 49 consecutive bull bars, but tails 48, tails 49. So how much higher are we really going? 50, a doji bar, an inside bar, high 1 for the bulls. Again, I think we're probably going to go at least a little bit higher, but I'm not really sure how much higher here. It probably at least to the bar 43 close. 51, another bull bar. So 4 straight bull bars, bull micro channel, and follow through 52. We're probably getting to a new high of the day, which we do on 53 before we find sellers. An inside bar, a high 154. It's another, bull micro channel, and we have 1, 2, 3, 6, 7 straight bull bars. So I would imagine, second leg sideways to up, probably buyers around 50% correction, but you can see the clear difference between this and the earlier spike, 22, 23, 24, 33, 34, 35. This is a lower energy type of spike. So it's probably, more of a place where traders are buying pullbacks. 54, sellers above during 55, and then a bear bar closing near its low. 56, probably buyers not too far below, and a reversal up. 57. 57 touches the 54 close. The bulls who buy the close of 54 buy the close. They scale in lower. 57. I don't know if it got to 50%. I don't think so. Maybe if you use like a bit of a distorted 57. Maybe if you use the highest possible 50% correction, 48 close, and the bar 53 high, then yeah, reach 50%. But the only reason traders would use that is because it has been such a strong bull trend day. So bulls might want to buy a 50% pullback, but they want to buy the highest 50% pullback because they're very eager to get into the market. However, 55 and 56 is probably good enough for a second leg sideways down, which is what's happening during 58. 59, a bear bar closing near its low, so probably going at least a little bit lower. But, we're right at the moving average where bulls have been buying all day. These are not sell the close bars. These are more buy the close bars. Reversal up 60, a high 2 for the bulls. At the moving average, reasonable to buy. We're probably in a trading range, but we're still not getting a close below the moving average. We're still getting reversals up, so we can still go higher. 61, consecutive bull bars closing near their highs, so you can buy above 61. Again, we should get to the moving average, but it doesn't look like we are. So it's okay to just buy. Follow through 62, but a doji bar. So probably, again, still going a little bit higher, but I'm not sure how much higher. It seems like we're starting to form a trading range. But again, still higher highs, still higher lows. Could be in a channel right now. 63, buyers below 62, most likely, makes a lot of sense. And a reversal up 63. And then a big bull bar closing it's around its midpoint, 64. It's pretty climactic. Possibly, first leg up and then a pullback during 63. So some sort of second leg trap on 64. And then you get a bear bar closing near its low 65. It's a small bar. You can, again, it's a little worse than this, but you can sell it for a second leg sideways to down because we're probably going to get some sort of minor reversal here. But this is your second leg sideways down at 67. So if you're selling 65, you get a reversal up 66. It's a high 1. You don't exit above 66, even if it trades above 66. You probably sell more if we get to the new high at 64. It's a tough trade to manage. And then you can see 67, a bear bar, but a big tail. And then again, when we get towards the moving average, what do traders do on 68? They exit the trade because we've had so many buyers at the moving average that they were able to make maybe a 2-point scalp, not even so, like a 1-point scalp, basically selling below 65. So it's not really a very good trade. Reversal up 68. High 1 because we haven't traded above another bar. You could argue high 2 if you wanted to, since 66 was a reversal up. An inside bar 69. And then we triggered the buy above here on 70. Again, probably going at least a little bit higher. We ended up getting, it looks just like a sideways, final flag or a 3-push pullback here for the bears, for the bulls. So what do the bears want? The bears want the bulls to start covering their longs. The bulls have had a pretty successful day. So the best the bears can hope for is we get a, bulls start covering their longs and we get some sort of sell-off, maybe back down to this, probably here is the target, to be honest. If the bulls are lucky, if the bears are lucky here, and if they're extremely lucky down here, but this is probably out of reach. I think this is the best case scenario for the bears. And most likely the target is right here, the bottom of this spike. And you can see we tried to get a reversal down. Bears trying to get the start of it, but it just looks like 3 pushes sideways to up or to down. And we're getting a reversal up 72, 73, 74. Bull bar closing near its high 74. Some bulls will buy, taking a chance. It's a buy the close finish. They know they can buy more below here and scale in, but dangerous towards the end of the day. Those traders are probably willing to also trade during the Globex session. And you get follow through. Again, huge consecutive bull bars, buy the close finish. For stop orders today, 5 was probably reasonable. 7 was probably reasonable, but I don't think either one of those was very ideal. 10, I don't know, maybe you could sell the close at 10, expecting a couple legs sideways down, a possible high of the day. I wouldn't buy above 14. You could just buy above 20 if you wanted to. 22 makes some sense. 24, 23, this is all buy the close, but towards the top of a potential trading range, but very small open of the day, right? So early in the day, you want to look for a potential high or low and a big swing, especially if the daily range is small. You're looking for a breakout in the daily range to at least double. And additionally, since yesterday, we broke out above the 18 bar range and back below it. Today, I think it's a little less likely. That only happens 10% of the time. So I think it's even less likely today that we're going to break out above the 18 bar range and then reverse back below it. So, buy the close. You can buy above 29, maybe 30, 31, 33. This is all buy the close. If you exit, you can buy again, buy the close. Maybe buy the close here. This is really climactic, though. Even this is really climactic. You could buy above the high 2 with a wide stop. I guess you could have sold 44 for a second, like sideways to down, 61. Probably exit below 65. Maybe you can sell for a second, like sideways to down, but you got to get out. If you took this trade and you exited with a loss, you're probably not very good at managing this type of trade, so you probably shouldn't take it. And then maybe buy the close, but it's too late in the day for me. On the daily chart, another thing on the 5-minute chart, if we're lucky tomorrow, we'll get, it's very unusual that you get it, but if we're lucky tomorrow, we'll get a big gap down to somewhere in here. Maybe a 50% correction would be really extremely lucky. But let's say we're extremely lucky tomorrow and we get a gap down to 50%. It's a moving average gap bar because we've had so many closes above the moving average that would be getting us a moving average gap bar. So if we get a gap down to here, odds are we're going to test back up into this area. It's pretty unusual for that to happen, but if we do get a big gap down tomorrow, you should be looking for a bounce back up into this area. The daily chart, again, I think this looks really climactic. It's a breakout above a bear bar. I think we're probably going to pull back pretty soon, but I keep saying that. So we'll see what ends up happening. 6,000 is becoming a magnet that's within reach. Do I think we go straight there? No, but I really doubt we go straight there. It's very unlikely, but I do think we're going to pull back. But again, this is really strong, so we might get another leg up here. No end to the bull trend really in sight, but still a very climactic trend. The weekly chart, again, it's important to see how this week closes. These kind of outside up bars don't usually get really great follow through, especially this far above moving average. It usually starts to go sideways here. So if the bulls can get a bull bar closing near its high this week, that's about the same size, 120-ish points. This one's about 75. So the bulls can get another 40 or 50 points to the upside. That'll be pretty strong for the bulls on the weekly chart. And yeah, that's pretty much the day.